Do you like getting more money? How about getting more money for doing practically nothing? Want to know about businesses that are giving their shareholders more money yet again? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. Being a dividend growth investor is like having a cheat code in life. I mean, what's the holy grail in this life? To be able to do whatever you want, right? Without having to worry about going out and working for money. Well, dividend growth investing can solve this for you. Indeed, if you can build a diversified portfolio of high quality dividend growth stocks, you'd be routinely waking up to new money you didn't go to sleep with. That happens through the dividend payments these companies send to their shareholders. Not only that, but these dividends are regularly getting increased. That's right, I'm not just talking about waking up to new money. I'm talking about waking up to more new money than you got before. Today, I want to tell you about 3 dividend growth stocks that just increased their dividends. Ready? Let's dig in. The first dividend increase I've got to tell you about came from MGE Energy Inc., stock ticker MGEE. MGE just increased their dividend by 4.7%. A near 5% increase in your income is always nice, but it's particularly nice when it comes about through no action of your own, other than simply holding stock in a company, which is about as easy as it gets. This is the 46th consecutive year of dividend increases for the utility company. And they celebrated 46 years nicely, as this dividend increase was actually an outsized one for the company. Their 10-year dividend growth rate is 3.9%, so shareholders are surely applauding this dividend boost. The stock only yields 1.9%, so you've really got to see some solid dividend growth to make sense of it, but with a payout ratio of 53%, which is pretty moderate for a utility, you already know the dividend is going to continue moving higher over time. The stock is up 21% year to date, and the valuation now looks a bit rich. Unlike most utilities, this name usually trades at a pretty high earnings multiple and usually sports a low yield. For example, the stock's 5-year average yield is 2%. So the current 1.9% yield isn't that far off. But most basic valuation metrics are slightly ahead of their respective recent historical averages. That includes the price-earnings ratio, which is currently at slightly over 28, but a 5% or 10% drop in this name would put most of its valuation metrics in line with where they often are. The second dividend increase you should know about came from CBOE Global Markets Inc., stock ticker CBOE. CBOE just increased their dividend by 14.3%. How about that? How can you not love something like this? Goods and services are slowly becoming more expensive over time through inflation, but double-digit dividend increases like this one keep you ahead of the game. This marks the 12th consecutive year of dividend increases for the exchange operator. The company continues to knock it out of the park, both at the underlying business level and at the dividend level, which of course go hand in hand. Their 10-year dividend growth rate is 22.8%, which means this increase came in lower, but it's still a double-digit raise, so it's hard to complain. And with a payout ratio of 47.1%, I suspect plenty more sizable dividend increases are coming. With a yield of 1.5%, there's a compelling mix of yield and growth here. This stock is up 36% year to date, but the valuation actually doesn't look that stretched. Most basic valuation metrics are in line with or lower than their own recent historical averages. The price-earnings ratio of 31, for instance, is basically right there with the stock's own 5-year average price-earnings ratio of 31.6. I wouldn't say the stock is cheap, but it doesn't look expensive either. And with a high-quality business, paying a fair price is never a bad idea. The third dividend increase to talk about came from Monroe Inc., stock ticker MNRO. Monroe just increased their dividend by 18.2%. dividend. Almost 20% more passive income than you had before for doing nothing other than holding shares. Isn't that awesome? What makes this even more awesome is the fact that this is the second dividend increase this year for Monroe after they increased their dividend by 9.1% in May. The automotive service company has increased its dividend for 17 consecutive years. Their 10-year dividend growth rate is 13.6%. That's impressive enough, but 2021 has been especially impressive in the dividend growth department for this company. You also get a yield of 1.9% to go along with all of that dividend growth. The payout ratio at 63.8% looks slightly high, but when you compare the dividend against actual free cash flow, this is an easily covered dividend. The stock is nearly flat on the year, and it looks surprisingly cheap. This one flies under the radar, which might be why the valuation looks so good. GAAP earnings per share can be kind of lumpy, as I just kind of alluded to with the payout ratio, but the price to cash flow ratio of 10.9 is well off of its own 5-year average of 14.5, and the yield is 60 basis points ahead of its own 5-year average. It's definitely an interesting name to take a good look at and consider. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these dividend increases. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over at Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.